The Bears failed to capitalize on the pattern we talked about yesterday, which is 3 full candles in a row. So, as we stay here in extreme greed, I'm really wondering whether it's 1995 or if it's 1999. And I'll tell you the reasons why. Seeing this article today from Bloomberg tells us that Fed rate cuts are likely to be slow, but not necessarily steady. Here they're referencing in 1995 soft landing, the Fed cut, then held for 3 meetings. And I want to go through and specifically talk about what that would look like on a daily perspective, on a weekly perspective, and on a year-to-date perspective, because I'll tell you one thing I am looking for. If this narrative is correct and the market is pricing it in, I'll show you exactly what I would be looking for. I would be looking at the 10-year note because I'm seeing a lot of things really rally today. But something is weird because yields are still going higher for longer, right? This is the 10-year note. So if we compare the 10-year note to the 2-year note today, what do we notice? There's pretty big divergence. 2-year note is down, 10-year note is up. So when I read this article right here, in 1995, the Fed cut and then held for 3 meetings, that is not priced in right now. It appears it might be getting priced in, but the market is not waiting. Look at Beyond Meat today. It is up by 50%. There are so many names that are just booming. So if you can bear with me for today's video, I'm going to walk you through everything you need to know. Part of what's really interesting here too is that tomorrow at 8:30 a.m., we're going to get a GDP print for the fourth quarter, and we're going to get 3.3, which is greater than 2.8, the current rate of inflation, which means there's actual growth out there. We'll come back and talk about that in a moment as well. And here we hear from the conference board that there's no recession anymore. Cool. Okay. Citigroup sees the S&P at 5,700 in Goldilocks scenario. Whoa. This is from today. And then investors can expect the S&P to hit between 54 and 5,800 before the end of the year. Whoa. And then cryptocurrency market hits, value hits 2 trillion milestone. Whoa. And then think about this. We want to think about where we are in the cycle, meaning the bell curve of adoption. And if this is truly going to be a 10-year trend, like we talked about on the weekend, I want you to think about this article right here. The godfather of AI leaves Google after a decade to warn society of the technology he's touted. I want you to pay attention to a few words here. The godfather of AI leaves Google. Okay, so the guy who created AI in the current way that we know it, and the company that basically did it, what are they doing? Man, they're failing right now. Google is mired in controversy. Why? They're left-leaning biases, right? Elon Musk is calling them out. DeepMind chief says Google bungled AI faces features is returning soon. Whoa. So the company that backed the godfather of AI, or the inventor, has not even had a successful AI product yet. What does that mean? I believe we're still very early into here. Google, who created the technology, does not even have anything they can point to say, we did that. And just before we go further, if you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you. So think about this. If the company that invented AI does not currently have a winning product for AI, we're not that far into it. He's been here for, I think he's been there for a decade. So AI in the current way that we know it is about 10 years old, but it's not really become mainstream until recently. So what does that mean? We might be AI hype trade is on for potentially a 10-year trend. Let's think about the chart we just looked at. After we break out of new all-time highs, we're currently only higher by about 6%, but this went up 220% after we got to new all-time highs. That is incredible. And we're going to go through and talk about again. We'll talk about 1995 a little bit more. We'll talk about the heat map. I just want to get through the rest of the stuff for tomorrow. So the market appears like it just wants to go up. And I'm noticing a lot of things which are telling me that. I think tomorrow, if this print comes in hot, this means that the economy is growing. And then on Thursday, we're going to have another data point. We're going to have PCE and also the month over month. We talked about this on the morning stream. This is going to be the January print, which we already saw hot for CPI. So I want to focus on the 3.3 and 2.8 because that shows real growth. And then think about this. In 1995, the Fed cut, then held for 3 meetings. I think right now they should be cutting. Inflation is not as high as where they currently are. And we know the Fed's inflation number. It's pretty simple. We take the current rate. Let's actually do this. Let's not be lazy. Let's do it properly. I'm winging this, but hopefully you guys will understand. So we go 5.3, which is the current Fed funds rate, minus 1.6, which they consider to be sufficiently restrictive, and that's 3.7. That's where we should have interest rates right now. Sorry, let me redo this here. So we got 5.3 minus 2.8, which is the current rate of inflation. We're currently restrictive by 2.6%. The Fed only wants 1.6%. So what they've told us to do is to go to here. Take the current PCE. So we got 2.8 plus 1.6, which they consider sufficiently restrictive. We get 4.4. Well, 4.4 is less than 5.3. So they could cut one, could be a jumbo cut of 50 basis points. I don't know. But then I could see them pause because I'm not sure the current rate of decline for the PCE is going to be steady. It could be a little bit sticky. So what does that mean? We might start to level off here. We've been going down pretty nicely here for about a year. We could start leveling off here in the high twos. So what would that mean? It would mean a pause. So that's really important. And if we're going to be getting a pause, again, as I look to the 2-year note, which today is down, compared to the 10-year note, which is up, what does that tell me? Short-term inflation expectations are going lower on the 2-year basis, but on a 10-year basis, they're going up, higher for longer. That's what I'm hearing now, which kind of matches up with this. Maybe the economy can hold on to it. And I want you to think about one more thing that I've been trying to mention more and more recently, which is being early is just like being wrong. So what exactly does this mean? What the bears fail to realize is that being early is like being wrong. If we go up from here by 200% and then we drop by 50%, if you're bearish, you lose a lot of money. So what that means is that by being early with your thesis, right? By being early with your thesis, your bearish thesis, but failing to get feedback, which means a technical breakdown, and we've talked about that a lot. It's a monthly lower low. Unless we see that happen, I don't think we're going to go lower. So we could potentially be in 1995, which is truly incredible. And as I look here to on the day, so the leaders, right? NVIDIA green, right? Eli Lilly basically flat. Let's look at the 1 week. Okay, NVIDIA bright green. Now let's go to year to date. Is the AI trend pretty clear? Yeah, I think it is. Google's even flat, even with all its blunders. Meta up by 39, NVIDIA 60, Eli Lilly 31. But why is Apple red? Well, we got an article from Apple today. Apple cancels work on electric car, ending decade-long effort. Maybe now they're going to shift their focus to AI, which means what? We're probably pretty early into the trend. And we saw evidence that there's more applications for AI, like humanoid robot startup. And Tyler Perry's scared, right? He's going to put a pause on his $800 million studio because he thinks that OpenAI Sora is going to come eat his lunch. So that's it for today's show. I laid a lot more out on the weekend review. That's now queued up here on the left. Otherwise, I'll see you at 9 a.m. tomorrow for the stream. Thank you so much, and good luck out there.